Welcome back to Alpha Recap, your after-hours rundown of the day's market moves. Today we dig into a clear risk-on tilt in tech, some outsized retail volume in single names, and a winter storm that could make life interesting for utilities. As always, if you have questions, you can reach us at stockalpha.ai.
Nice to be back. Markets closed with a pretty distinct flavor today. Tech-led momentum mixed with big swings in names that retail traders love. Let's jump into the biggest headlines.
Top of the list, that leveraged NASDAQ product rallied hard. It finished the day up about 3.9% to roughly $52.73, and volume was huge, about 148 million shares. That was the clearest signal of a risk-on move toward large-cap techs in the NASDAQ complex.
Yeah, when a triple leveraged product moves like that on heavy volume, it usually means buyers were piling in, especially momentum and ETF-driven flows. It isn't a subtle cue. It tends to amplify whatever is happening under the hood in the broader tech space.
Exactly. In plain English, that product magnifies gains and losses tied to the NASDAQ, so when it jumps nearly 4% on heavy turnover, a lot of market participants read that as a bet on more tech strength in the short term.
But while tech was getting a bid, several individual names showed the opposite. Big declines on massive volume. For example, a hydrogen clean energy name slid about 3.9% to roughly $2.22 on about 135 million shares. Another small cap fell about 4.4% to around $12.55 on about 146 million shares.
Those are classic signs of selective rotation. So we saw a broad tech bid, but high turnover and selling in specific volatile names. That tells you this wasn't a blanket market rally. It was more targeted, with retail or options-related activity driving outsized moves in certain names.
And speaking of commodity hedges and tactical bets, a short silver ETF jumped about 3.7% to roughly $2.82 on about 178 million shares. That's big for a commodity hedge product and suggests some tactical positioning there as well.
Put that all together and you get pervasive heavy volume across both long and short bias products. Many prints north of 100 million shares. That pattern points to either meme retail flows, quant rebalancing in ETFs, or options expression that pushes big volumes around.
Which translates to this practical takeaway. Higher intraday liquidity, sure, but also more slippage and execution risk. If you're trading, you can get in and out, but you can also get run over if you don't manage size and orders carefully.
On the attention front, one big name lit up search activity. Intel's Google Trends interest doubled to about 10,000 searches. Search spikes like that often precede higher trading volume and momentum moves, so Intel is one to watch in the near term.
Let's explain why that matters. When search interest jumps, it means more people are looking at the company. Retail traders, journalists, maybe even analysts. That attention can lead to more buying or selling, especially if someone posts a rumor, an analyst note, or a filing shows up. But attention alone isn't news. It just raises the odds of volatility.
Right, if Intel's search spike gets confirmed by a press release, an SEC filing, or some product or earnings chatter, that can accelerate flows into semiconductors and large-cap techs, which would feed the momentum we saw in the leveraged NASDAQ product. On the flip side, attention can attract short-term momentum traders who add to the chop.
So for traders, the checklist is straightforward. Watch Intel's news channels, keep an eye on options open interest for sudden builds, and watch whether search interest spreads to other semiconductors. If no concrete news shows up, expect volatile range trading rather than a clear directional trend.
Switching gears, we had a real-world risk hit the tape. Duke Energy warned customers across the Carolinas to prepare for Winter Storm Fern. They mentioned potential multi-day outages and elevated restoration costs. That's a live operational risk for utilities, regional real estate, and local economic activity.
Utility exposure to weather is one of those things that investors sometimes forget until it happens. When outages occur, utilities initially foot the restoration costs, which can pressure near-term margins. Management rarely gives immediate cost estimates, so shares can wobble on uncertainty alone.
And those outages aren't just a story for the utility stock. They can hit regional commercial real estate, shopping centers, office buildings, because less power means less economic activity. Local consumer spending dips, contractors get busy, and suppliers that service the grid see higher demand. That all creates a chain of possible earnings or guidance impacts.
For investors in income-oriented utilities, the practical moves are to follow outage maps, restoration timelines, and any guidance revisions from Duke. For traders, there are short windows to trade around restoration updates or changes to weather models.
Back to market structure. Today screamed elevated retail and quant participation. Heavy volume in both ETFs and single names, plus the attention spikes and weather-driven operational headlines all combined to create a high-velocity tape.
And there were some quieter, strategic items in the mix that may matter down the road. A wine and spirits group previewed Access Live in Las Vegas in early February, which could produce supplier and distributor news that moves beverage names. A self-storage tech vendor announced a free March event focused on automation that could influence storage REITs like Extra Space, CubeSmart, and Public Storage.
Not headline splashes today, but these industry events are where incremental catalysts come from. Also, a data firm launched a granular employer benefits dataset, useful for insurers and PBMs over time, but not an immediate market mover.
And a staffing company added an energy and utilities executive. Operational hires like that can signal a strategic push, but we'd want to see contract wins or margin impacts before treating it as stock-moving news.
Quick hits before we get tactical. The leveraged NASDAQ product rallied about 3.9% on heavy volume. Plug Power slid about 3.9% on huge turnover. Ondas dropped about 4.4% on outsized volume. The short silver ETF rose about 3.7% on heavy trade. Intel saw search interest double, and Duke warned of storm-driven outages. That sums up the day.
Okay, what should folks be watching tomorrow? First, follow through in the NASDAQ. Does that leveraged product keep its momentum? Look at index futures, sector breadth, and whether other leveraged products keep pace.
Second, check Intel for confirmation. Any SEC filings, press releases, or analyst notes would matter. Track volume and options activity early. That's where the first signs of a real move show up.
Third, watch liquidity in the names that sold off. Plug Power and Ondas. Will selling continue, or will buyers step in? Watch for block trades or big options flows that can tell you who's behind the move.
Fourth, monitor Duke Energy closely for restoration timelines and cost estimates. That will determine how long the operational cost pressure may weigh on the utility and related local sectors.
And finally, keep an eye on those industry events we mentioned, the Wine and Spirits Show and the Storage Automation event. They could produce company-specific headlines that create new tradable opportunities.
Let's wrap up with 3 clear takeaways. 1. Today was defined by elevated volume across both ETFs and individual names, which increases tradability but also execution risk. 2. The leveraged NASDAQ product's strong finish signaled a risk-on tilt into tech, but that was selective rather than broad-based. 3. Real-world operational risk showed up with the storm warning for the Carolinas, reminding investors that physical events still move markets.
I'll add one practical note for traders: size matters. With heavy retail and options-driven flows, managing position size and using limit orders can save you from slippage on days like today.
Good point. All right, that's our market digest for January 22nd. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with more recap and what matters next. Stay safe out there, especially anyone in the Carolinas dealing with that storm.